What's up, guys? Okay, real quick, I just want to do a quick little market update and I'll tell you about what I'm doing, my trades and stuff. So quick shout out to this guy, and the reference for this video, I'm lazy, I'm not gonna put the link in the description, but right here, if you search the bear market is not over, Mott Capital Management, this was put out 2 days ago. This was really good information. It didn't make a whole lot of sense to me why, let's see, this is SPX, right? Let's do SPY. It didn't make sense why S&P 500 is just going up and the volume. I mean, look at that volume. Is that, let's see, 62 million. Okay, those bars are not right. Are they? 120, 172. I guess so. No, that's not right because we look over there. No, that's the price action. Okay, I guess those. Anyways, you just look and see that volume is really light. Okay, and then we come up here. We do get a green day here, as far as volume, and then volume drops off. Okay, so anyways, it's just concerning that the volume is low and the price is going up. So this guy did a really good explanation of that, and he's like, "Yeah, the volume's low." I was like, "What? Hey, I was wondering about why the volume was low." And he said that there's information. There was a Seeking Alpha article talking about CTA estimates. So this is like algos. By CTAs are like futures professionals, and they buy up a bunch of futures or something. I'm not really sure. I don't fully understand it. You can Google it, figure that out. But anyways, this is a institution or a set of institutions who are buying S&P 500 futures, and you can see the algos are set to go until the 10th, which is supposed to be Thursday, I think. Okay, he said Thursday. I see here, see March 10th. So there's going to be buying up through here and then level off. So if they're the only volume, when that stops, you would think, well, the market's going to continue in a downward direction. So anyways, that's my plan right now. We're at Tuesday. I'm kind of holding off until Thursday to do any more stuff. I've been getting excited about the VIX because the VIX is just insanely low. But yes, before I go over to the VIX, you can see on the stochastic get across today, which means hey, we're headed down. I would like to wait Wednesday, Thursday, maybe even Friday, like the guy in the video. Again, watch that video. It's pretty insightful. And so yeah, I'd wait till then, and then we're gonna hopefully be riding it down. So I did. You can see I have a white line here. I took this position here, so I'm about to get blasted on that SPY position. I sold the call spread up here. It's fine. And I took a SPX. I took my first SPX position. I was so proud of. It's like playing with the big boys, but my position is so small, it's like not even real. But I did sell the calls up here, so this one looks pretty good. I think we'll be all right. And again, I mean, this is just the same as the S&P. It's the same as SPY. This is just the actual index. You have a cross right there on stochastic, so I think the S&P 500 is going down, especially by like Thursday, Friday. VIX. This is the trade. I can't put any more on because I am very light in it. So you can see I about bottom ticked it. Down here. I've been placing my VIX positions back, so if we do rip up, which would seem likely, it seems like we're pretty range bound, just going bloop, 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 bloop. And you know, banks are having a difficult time, so it doesn't sound like the start of a bull market where the VIX will just crash. I could be wrong, but it's okay. I took debit positions, small positions, so if I am wrong, it's fine. It's not gonna in my trading career, I'll be just fine. So what else did I want to talk about? That's pretty much it. I think we're going down. I think probably by about Thursday, Friday, I think we'll continue to be bullish because if you look at the chart, they're buying. Nobody else. It doesn't seem like there's a lot of volume. Maybe they're trying to push it and then get retail volume up. That's my theory. So that could continue on for a while. And then best trades on the table. If you haven't already put one of these on VIX, I pulled it up to where we could do. This is one of the accounts I trade. My wife and I have I trade 2 Roth accounts. So here we go. Let's look at VIX real quick. This is one I put on here. I'll talk about this real quick. Activity, boom. These are the 2 I put on today. So I am bearish on CPRT and APLS. Let's go look at that real quick. CPRT. Boom. All right, so yep, you can see I entered here, and what did I sell? Boom. I sold, you can't see over here, but I sold the 70 and bought the 75 calls, puts. Holy crap, did I do puts? No, okay. I didn't sell, I did a debit spread. Okay, that makes sense. Yeah. So I bought the 75 and sold the 70s. Let's go. I had a heart failure right there. So yeah, that's why my green lines are down here. It makes sense. Okay. So yeah, and I gave myself 45 days, which is, what is that? Look, I'm just gonna blast through these. Okay, we're not worried about all this. 45 days, it comes out here. So as we begin to cross this green line, you can see this one. It looks like we're kind of wedging up. Wedge. So I said, hey, the premium wasn't super great to sell the calls here. It was low. So I paid a little bit of premium to capture this fall if it falls. If not, we did small. Debit spreads are small, so this thing will come down. The stochastic did not cross. So why did I like this one? I think I liked it because on Webull, on the mobile app, you can go and look at your big sell orders. Your big orders, you can see if they net bought or net sell. I want to say on this green day, there was a divergence on 331. If you check Webull, you scroll down and you'll see the big order thing. There was a divergence that went up and you had big sell on this day from big orders. So that's why I like this one. So anyways, I did a debit spread. I start getting green down through here in 45 days. Next up, boom. What else do we do? APLS, I just kind of threw this on. I was like, I want to put something on. 45 day, 95 to 100. I did sell the calls on this one. I sold the 95 and the one and bought the 100. So that is a bearish position. Let's see. APLS, boom. That is not right. APLS. Oh. Ta-da. Yes. So this one, I didn't even make my lines, but we sold the 95. Is that what I said? Good night. I can't even get up there. Make sure that's right. APLS. So yep, sold 95, bought the 100. So that's a pretty decent trade because that'll be over 15% return. And then I bought the 100. So yeah, that's why I like it. I guess it's just big, and 63. 63 divided by 436. So yeah, it's a 14.4% return. So yeah, it's a nice little return. I'm doing stuff small. I haven't found like really beautiful opportunities, so I'm just kind of like trying to trade and just move on. Let's see what else we got. Tasty. Yes, that's it. The VIX. Let's look at the VIX right now. VIX, VIX, X trade short call. This we'd want to go long. Now we usually sell the insurance plan, or we don't usually buy debit spreads. But in this kind of environment where things are really tight, you want to go small. I do debit spreads when I want to go small. I sell credit spreads when I want to go big. So look, this looks like I got 2 spreads on in this account. Like what is this? Negative call. I don't have any naked things open, so we're not gonna worry about that. But anyways, let's say you went right here. So what we're looking at here, max profit, max loss. Here we go. If you just say you want to capture the 20 to 30 move, right? So, and let's change our time. Y'all are like, what are you talking about, Jordan? Don't worry, guys. I'm going to show you. First is pulled up on the charts. I'm trying to make these videos quick because if I spend too much time on it, I won't do it. That's why I haven't done anything for like a month. All right. So we're trading at $19. All right. So if we went from 19 to 30, what would that return be? It'd be like a 30% return, right? So 30 divided by 19 equals, okay, 57%. Hey, that's not bad, right? So the better thing to do, because if you're feeling certain about this, and VIX, you can only trade options, I believe, right? You can't buy VIX. So you went from 19 to 30, right? Okay, I'm messing this up. Here we go. All right, your probability of this happening is 28%. That's what the implied volatility is telling you. Now, through price reversion, it seems more than like a 30% chance of that happening, because every time you drop below 19, it keeps going back up. So if you spent, $255, what's our time frame? This is 42 days. All right, you spend, say, $260 on this. Is it still trading? Okay. It would need to go to, because every dollar is $100, so you'd need to go to 2260 to be profitable on this. So let's take it to 20. So now you'd need to be at 22 to be profit. Does it have our break even on here? I don't think it does. Okay. I like that. So 2265. So you're spending less, which is probably why I have, yeah, look, see, I have 2 entry points right there, 21 and 30. So $1.65, so it's $165. Max loss 165, max profit 735. So I like this trade. It gives you 42 days, and these spreads are like, what do you call it? They're like stocks. So you can trade these all the time. Like you saw the price was moving around right here. So you click review. Well, you can't see because I have it blocked because it shows account information. But anyways, oh, it's 5. I gotta go. But I really like this trade. You have a nice. I have to extend this a little bit. Hold on, so you can see the screen, so you can see what I'm talking about. Extend thing. Not showing anything. Okay, I'm gonna pause. Okay, now you can see. I can't go anywhere else because I'm pretty sure it's that hides account information or whatever. Anyways, I really like the VIX alert right here. It's hard for me to not get too excited about it, so I just be like sitting on my hands. But you can see our chances. Let's talk about this real quick too. So if you just bought the 21 call, it's $269, right? Now, if you're also selling this 30 call, well, that takes out almost $100. That's $96 of theta. That's why we would do a spread as opposed to just buying a call, because what's the chances of this thing going to over $30 in the next 42 days? Now, sure, it could, but if you're a business, this is about probability. This isn't about like, we're not gamblers. We're not like, oh, what if it goes back to 80 like it did in the thing? Who cares? So we're in it to make money, and the probability would say, we're probably not going to break this white line. If we do, then we would be in like recession. We probably have craziness, but it's stayed on this white line. So probably out by here about $28, $29. I mean, if you really want to be crazy with it, you could go, come over here and 28 and reduce your costs even more. I don't like that risk. I just like max profit 560. I like this better, 735. So instead of a 57%, because that's what we did, if you were able to buy VIX as a stock, which I don't think you are, you can even do that. It's only options. That would be a 57%. But if you did a spread like this instead of 57%, so your max profit is 735 divided by 165. Boom. So -1 because you started with 1, so 345% return as opposed to a 57% return. That's why we like spreads and we use options. And we use spreads because we want to eliminate our theta decay if we buy debits, and then we usually like to sell the thing. So a more traditional would be you'd sell the put if you were bullish. And let's see, go. So we'll show you why we wouldn't want to do that, because there's not enough premium there in order to do this. Boom. 16. It's right there. Let's look at our time. 21 days. 450. That cannot be real. Let's pause. Okay, so here we go. Anyways, yes. So here we go. So you'll see this is $4 wide, max loss 370, max profit 30. So the premium, we want like about an 80 pop. The premium is just not there. So you see nobody's buying this. You just come all the way up here and you can make $5, and your spread cost is like $2, so you make $3. That's why we would go long a debit spread, because the probabilities and the profit makes sense. And anyways, there you go. So trades of the day, to sum everything up. Bullish the VIX, very bullish the VIX, but the danger here for people using the kind of strategy that I use is that you get overexcited and overconfident. So you just very tiny on the debit spreads. There you go. Also, link below in the video description if you want to use this kind of platform. You click the link and use my referral code. I would greatly appreciate it. And ta-da. So there you go. Thank you guys for watching, and I'll see you next time.